Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us the major markets are setting up for a minor correction. He also takes a look at crude prices. InsideTrackTrading.com President Eric Hadik examines the US dollar, gold, bonds, interest rates, and Bitcoin. Lobo Tiggre from the IndependentSpeculator.com takes a close look at silver and uranium and what might spark increased interest in them. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Reaugh and Cypress Development CEO Bill Willoughby. We'll talk to Ross Clark right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
I always look forward to it, Jim.
Ross, the stock markets, you said had an interesting thing, something about a Hindenburg, and all I can think of is, the humanity. But So what is a Hindenburg when we're talking about stock markets?
Well, we talk about the stock market. A Hindenburg is a set of circumstances where you're seeing new 52-week highs and new 52-week lows at the same time. And you have to have, there's a number of rules involved in it, but you've got to have over 2.4% new highs and 2.4% new lows at the same time. So it's a really big point of either indecision or a major change going on within sectors, so that if you're getting sector action, say, out of the staples and into some more conservative or from the conservative ones into the more aggressive ones, that's when you start to see Hindenburgs. And we haven't had a crash without a Hindenburg, but then again, not every Hindenburg brings on a crash. Normally you will see pretty good corrections. The last October was the last time we saw a Hindenburg in the NYSE. And this time we have it not only on the New York Stock Exchange, but also on the NASDAQ. So this is a bit of a rarity. And it comes at a time when, guess what? I mean, seasonally you'd expect to see July, and especially in the years such as this one, mid-year as far as the elections are concerned, that you would get a correction out of a July high into a mid or late August low. So it fits the criteria that we will be looking for some choppy market action. And when you look at what's been going on in the bond market, we had the bond market have a pretty significant move rallying into a couple of weeks ago. A nice correction back down, and it's bouncing around just like the equity market has been now for the last week and a half or so. So, and every time that we end up with Trump talking about interest rates, or Powell or one of the other governors, we're getting some pretty significant market action within bonds. But overall, 25% move in rates looks to be pretty much in the cards for the end of the month. A 50-point move would be just probably outside of what the expectations are right now.
Crude oil, is it moving, and in what direction?
Yeah, well, crude got a little ahead of itself that last rally up to 60 a week and a half ago, put in a divergent high. So the first rally off the bottom at 52 had taken us up to about 59. We had a pause, and then we've had the second rally up to 60. There was divergence on that high. The relative strength index failed to confirm that high. And this is normal within the 10-year cycle that we're looking at. There should be a choppiness with an upside bias here. So during this week, we had corrected from 60 back down to 54.5, and we bounced back to 56 and change. We don't want to see it close below 53.5. That would be outside the, quote, model that we're looking at right now. So as long as it holds that 53.5, still looking for upside bias as we move through the coming months here.
Is there any overall sign that you're seeing that after seeing record highs over the last couple of weeks that we're obviously going to see some kind of correction?
Yeah, well, what we see at this point is that you've got a 10-year bull market here from '09. And if we look to other bull markets of this duration, you go back to the 1949 to 1961 market. Percentage-wise, it's about the same rally. It's about 320% off the low in both instances. We had that good hard correction into the first part of this year, which is similar to what happened back in the 1959-1960 part of that cycle. The rally into 1961 is similar to this one. And what we would be looking for ideally is a deep correction, maybe about a 10% or here, another new high, and then a good hard correction after that, which probably takes us into sometime next year. But from where we are right now, a 10% correction, or decline, not correction, but 10% decline off of the summer high would be pretty reasonable. That would take us down just below the levels that we put in May. You have to remember that the end of May itself was just a terrible month. June was then a fabulous month. And July is turning into one with small upside momentum. But once this momentum is lost, the chance of us going back down to that May low, I think, are extremely good.
Ross, thank you so much for chatting with us.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Eric Hadik, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Eric Hadik, CEO and President of InsideTrack.com and InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, are gold and silver finally perking up?
Yes, I definitely think that that gold and silver have entered a new phase of their overall trend. I've described it for the last several years, this outlook I had for 2015 through 2021, where we'd see an initial surge in 2016, then you have the very typical, whether you call it a second wave in kind of Elliott wave terminology, or a bottoming phase, softer bottom. There's all kinds of ways to describe it, but basically you get that initial surge which signals the end of the bear market, and you got that in 2016. But then there's an extended narrowing period where the bulls and bears kind of fight it out for a while, proportionately speaking. And then you get ready for a more sustained and more significant up move, which is what I think we've seen since late 2018. In fact, I know I've offered it before, but there's a couple reports that I've done since primary one was back in September of last year, and it outlined the particularly bullish outlook for gold and gold mining shares from third quarter of 2018 all the way into late 2020, possibly early 2021, and provided a couple of landmarks to look for, which these markets have adhered to pretty closely. The first two were to see a surge into late February, early March, and a 2 to 3 month peak at that time, and then a subsequent rally into June or July with another 2 to 3 month peak set, most likely in July. Although the XAU index was showing that it could stretch its peak into early August. But this series of ascending highs, that's really the key, ascending highs and ascending lows, and each time you get a bit more thrust to the upside and a little bit less pullback in the ensuing correction. So I think that's definitely positive for the immediate term, but also it's indicative of markets that have transitioned into more of a overall uptrend and are expected to see more upside over the next 18 months.
What's the driver to higher gold and silver prices?
That's always the $64,000 question, and you get everyone debating everything from inflationary fears to geopolitical uncertainty. But the closest correlation I've seen is basically a more general term, hard currency versus fiat. And since the dollar has really been the lead fiat currency the last few years, the fact that the dollar, for all intents and purposes, peaked in November and December of last year, and that was a secondary high. And since then, it has been in somewhat of a topping phase, but hasn't really given a convincing reversal signal to the downside. But each time you've seen some signs of weakness, that has been when gold has had its biggest up moves, and at the same time, it's also when some of your cryptocurrencies and Bitcoin also saw some good surges, particularly that the dollar's decline in June. And more recently, the dollar's recovered a little bit, but starting to show signs of a even lower high, relatively speaking. And I think that the dollar is more or less signaling to traders that there isn't more immediate upside on the horizon, and so that kind of takes a weight off of gold and has allowed it to begin to build some upside momentum, which I think has been, like I said, developing since the bottom in late 2015, but 2019 to 2021 is really when I described why we would see a more sustained uptrend during that period of the overall cycle.
Should we expect a sudden jump in the price of silver?
Well, I think silver is certainly in the process of doing some catch-up right now, whereas gold already reached its 6 to 12 month upside target, which was right around 1445. Silver has been looking to get back up to its 3 to 6 month peak around 1640 on the September futures, which is what I'm watching. And so that's an initial upside objective, but I do think that silver's setting up for a period of time where it's going to outperform what it's done up to this point, and I think some of the time it will outperform gold. And that's when you're into a little bit more of a commodity inflationary phase. And we've seen a couple warning signs of that in grain markets and a couple other markets that we could be seeing a little bit of commodity price inflation on the 3 to 6 month horizon. So that, again, like I said, is when you see silver respond more than something like fiat currency or geopolitical instability. Often those things have a mixed effect on silver, but it has been going through a bottoming phase. It really didn't bottom until November, whereas gold did in August of last year. So there's a lag effect, and July is really when things were set up best for silver to have a bit more of a surge, even though gold has already undergone a pretty good spike higher.
Many people consider copper to be kind of an indicator of how economies are going overall. How is copper doing, and where's it going?
Copper has looked a lot weaker than the others, and when you talk about something like price inflation, it can be driven by demand or supply. And I think that when referencing things like the moves up in grain markets and some other commodities, it's been more of a supply disruption or supply fears as opposed to a massive demand spike. And so when you're talking about something like copper and economic conditions and outlook, it's not really responding very positively right now. It's just been languishing down near its 3 to 6 month and intra-year lows. So it's a little bit of a different animal at this point, and I think it's going to take something more to get copper going again, whereas gold and silver, it's more the precious metals aspect of silver that's moving it right now. The industrial metal part of its pricing and pricing of other metals is yet to materialize.
The other precious metals, palladium and platinum, how are they doing?
Platinum's been more mixed. Palladium has remained really the leader of all of this. Palladium's been the strongest over the last couple years, and that really kind of helped lead the turnaround in gold and silver last year, and it just continues to head to successive multi-year highs. But I had discussed in my July newsletter why I thought that palladium would see a surge into July and August, but that is when a multi-month peak is most likely. It's had a somewhat consistent, about an 18-month, year and a half cycle between highs, and there were other longer-term multi-year cycles that I have that are coming into play in July and August, so it wouldn't surprise me to see a peak in palladium. I've had a $1,650 to $1,700 upside target, and it's getting a little closer to that, so if we could see a spike up there in the coming weeks, it might set the stage for a more significant peak, and that would probably coincide with the potential for gold and silver and shortly after the gold silver index to also set some important peaks and then kind of create a trading range at a higher plateau and wait probably into fourth quarter of this year before a new surge is more likely in some of them.
We'll have more with Eric Hadik when This Week in Money returns.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYVresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Eric Hadik. The overall international currency market, is the U.S. dollar going to remain king?
I think for the foreseeable future, but my contention has been, and this is a much broader, much longer term and more general type of cycle, but that this period of 2017 to 2021 which is an ongoing 40-year cycle I've documented, going all the way back to the founding of America and that great fiat currency experiment known as the Continentals, that you'd see the dollar, you'd see a concerted international effort to begin to offer an alternative to the dollar. And I think around that 2021 time frame is probably when we'll start to see some more obvious manifestation of that. But there have been so many things over the last 5 years that continue to lay the foundation for an alternative to not only the dollar, but to Western banking and forex and financial control. I think that's a battle that right now is in some subtle phases, but I expect them to become a bit more overt in the coming years.
Usually if the markets downturn, the U.S. dollar increases in strength, yet right now the president says he would like to have a lower dollar. Are those things in conflict?
I think that I talk about correlations and the real challenge between trying to trade off of intermarket correlations, because at any point in time there's different driving factors for the lead market in that correlation and for the lagging market. And so an example, for many years you had stock market kind of following the interest rate market. So, when bonds and notes were heading higher and it was indicative of lower interest rates, that was positive for the equity markets. But by the same token, if stocks suddenly became independent of that and saw a sharp sell-off, you would also get a rally in bonds and notes on more of a flight to quality. So, on one day you could have both of them moving up in tandem, and on another day they're going completely opposite. And the real trick, the real challenge of any correlation is to know on any given day which one is the driver and which one is following the other. So we've seen a lot of what you're talking about where the higher dollar has had one impact on equity markets. But I've actually been surprised that we haven't seen more dollar weakness, because it certainly is something in the arsenal when you talk about a trade battle. And one of the things I had done this series of articles back in 2016, and I was describing my outlook for the dollar and why I thought it was coming into a major peak. And that was telling me to look for a Republican administration to be elected in 2016. At the time, I didn't have a strong conviction on who that would be, since the primaries were still working their way out. But the reason I was saying that is because you look back over the last, really going back to the 80s and the Plaza Accord and what happened during the Reagan administration, that a weaker dollar always coincided with a Republican administration and a stronger dollar always coincided with a Democrat administration. And part of that was their differing views on which was better. And, Republicans tended to lean towards that lower dollar, increase exports, and have a positive impact on the economy type of mentality. And so you saw the dollar top shortly after Trump took office, and you saw an initial sell-off there for almost a year. And since then it has been in a recovery, but as I mentioned earlier, that recovery really appears to have run out of steam at the end of last year, and now it's been struggling to hold up at these secondary highs. So the potential for another dollar decline, I think, grows stronger. The argument grows stronger for a weaker dollar every month that goes by without the dollar breaking out above 98 on the dollar index. And I do think we are going to see another wave down. And it wouldn't surprise me if that has a little bit of a negative effect on the equity markets, because of different inflationary fears and even what that does for the perspective of interest rates. You know, if the dollar does start dropping, do you get a little more of the mentality of, you know, well, at some point might need rates to stabilize or bump up a little more to support the dollar. You just get this vacillating correlation where, again, whatever happens to be the focus of the day, whatever traders are either most fearful of or most convinced of, drives correlation, and it can be completely different than a week from now or a week ago. So that dichotomy there between the dollar and equity markets, I think, is something to be watched closely over the coming months. And I think that both of them, both the dollar and the equity markets, have the potential for a couple of intermediate sell-offs in third quarter and fourth quarter of this year.
The Fed has changed its tone about interest rate hikes from going from 3 planned hikes to perhaps dropping rates, and nobody knows how much there. Why the change in tone from the Fed?
Well, I think that was probably a combination of things. One was certainly the equity markets at the end of last year, and I think that probably scared them a little bit. And of course, they've got the constant drumbeats from the administration, talking about how all he wants to see is lower interest rates, and doesn't care about, you know, whether that has any impact on inflation, on the dollar, on whatever. You just want to see the stock market skyrocket, which might or might not happen with lower and lower interest rates. But I think there's been a combination of things, and then you get a couple of reports that aren't quite as bullish as expected. You get the trade battle continuing to drag on, and the idea that ultimately that could have a negative impact on equity markets and on the parts of the economy. And I think that just has really raised some yellow flags. But the ironic thing, I think, is that it wouldn't surprise me to see that tone also shift in the coming months, where, you know, all of a sudden it's inevitable that rates are going to be dropped in everyone's mindset, but then you start to get a couple more positive numbers come out, and you know, they keep talking about the drop, but then, okay, will there be another drop beyond that, or are we going to suddenly shift that outlook again, even if it's just to a more stable outlook where traders and economists begin to downplay the likelihood of a second rate drop, and that in itself has an impact. You know, the change of perception is often more significant than the actual change in, say, interest rates. So I think that we're going to continue to see this uncertainty and this pendulum swinging back and forth where interest rate expectations are concerned.
Is it unusual to hear a call for lower interest rates when the markets are at record highs and unemployment is at a record low?
Is it unusual? Well, you could ask that question about dozens of things that have come out of politics the last year or two. So it certainly is in the In the more rare situation, I don't know if you can cite another example, so maybe it's unprecedented. But yeah, it's a little out of the norm.
We'll have more with Eric Hadik when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Eric Hadik. Eric, what's going on the cryptocurrency front?
Well, Bitcoin and that's really the one I focus on the most, and that's primarily because it's got the most and the most reliable data for doing technical analysis, and it has adhered to the type of cycles that I use and follow the closest. So most of my analysis is based on Bitcoin. I was looking for a surge into late June. I did a series of cryptocurrency reports, which I'd also be happy to send copies of some of those to your listeners as well. But the outlook was for a surge above 11,500 leading into late June, and if we got that, that would be the time for a likely peak for a while. It doesn't mean the start of a new downtrend, but it does mean that we see some consolidation at a higher plateau. And Bitcoin followed that very closely, peaked right within a 4-day window that I had outlined to my readers, and spiked well above that 11,500, although it only stayed up there for a day or two before coming back down. My outlook from there was to see a correction down to about 8,500, and then it would be in the best position to steadily begin a new up move from there. So I'm still bullish on it on the 6 to 12 month horizon, and we've dipped down below 9,500 recently, and I think that could spur some recovery as well. I'm watching late July for a potential secondary high, and if it follows that scenario, that will kind of hone my outlook for the next several months and give me some more clarity on how I think the next move could unfold. So that's really what I'm watching right now, and looking for some short-term support down around 9,500, but intermediate support I think is much stronger around 8,500.
Some municipalities in British Columbia are talking about accepting tax payments in Bitcoin. Is that a sign that it's maturing?
I think there's a lot of things that continue to add validity to the whole cryptocurrency arena. And, whether it's Facebook's recent announcements and then their future, some of the discussions with different banks as well, central banks, just more entertaining the idea, or seeing how to factor that in over the 3 to 5 year horizon. I think it continues to build that credibility, and I go back to an analogy that I used a year and a half ago, talking about the bubble that burst in Bitcoin and that crash into December of last year was very similar to, even in duration, in percentage, the percentage of the bubble that was lost in that ensuing crash. There were a lot of parallels to the NASDAQ 100 in the early 2000s at the peak and then at the bottom of the dot-com bubble and crash. And the real parallel that I drew from that and tried to emphasize was that crash in Bitcoin didn't mean that it was the end of Bitcoin. It meant that you had this bubble, it needed to get back to what I called an equilibrium point, which I had pinpointed down at 3,200, and then it starts to act a bit more like a normal or semi-normal market in the months and years that follow. And the same way that it took years for tech stocks to come back into vogue and to really build upside momentum on a proportional basis, I thought you'd see the same thing with cryptocurrency, a little bit faster because the whole cycle is shortened, but the parallels are there, and I think that much like tech stocks eventually did come back into favor with traders and subsequently took off, I think that you're going to see a similar pattern in cryptocurrency, whether Bitcoin remains at the forefront of that or not is anybody's guess. But I do think that you're now into this next phase where the market does gain more of a following and a bit more of a less volatile, less uncertain type of trading, where things start to move a little bit more in a controlled manner.
Are nations going to start opening up their own cryptocurrencies, along with Facebook, which apparently is holding hearings, but who's to stop anyone from creating their own cryptocurrency?
Right. I really don't. I can't say where other nations are concerned. I think that something like that is probably still farther out on the horizon, that there are so many obstacles to overcome before getting there. It certainly makes sense that the digital currency is in the future, and I even keep my eye on things like the strategic drawing rights at the IMF, which are kind of a digital basket of currencies that's been around for 40, 50 years, and is used to, loan money to different countries. But, maybe there's something some compromise between something like that and your current cryptocurrency arena that is formulated before you'll get all out national governments committing to it.
Going back to what might seem mundane, crude oil, how's it going to be performing over the summer?
Crude oil has been in this contracting wedge type of formation that I think is going to be the norm for another few months, where you had the extreme peak in September, October of last year, and then a dive into a pretty significant cyclic low in late December. And since then, it's been, rally back up to a lower high, and then a sell-off to a higher low, and then a rally back up towards it. It's just that kind of finding some equilibrium, and I think that's going to continue with $50 on the low end and $60 on the high end being a general range for crude for some time. But I do think that as we get out towards the fourth quarter, that if it has followed a couple of patterns that I'm looking at and fulfilled a couple criteria, that it would then be in a better position to mount a more sustained rally.
Eric, before we go, could you just tell us a bit about InsideTrack.com and InsideTrackTrading.com?
Well, actually, we've shifted all of our web traffic to InsideTrackTrading.com, but you could still get to it if you only put in InsideTrack.com. We've got a redirect there, but it's really just the focus of our services, and what we offer is technical and cyclical analysis in primarily the financial markets, but also your commodities, anything that there are futures on, and it's a short and intermediate term is really the primary focus of our publications, although I also do a decent amount of longer term analysis. But we've got a lot of reports and other samples posted on our websites, and we're happy to send out a free trial to new users. So that's really a very general synopsis of what we've got on our website and what you can find at InsideTrackTrading.com.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and President of InsideTrackTrading.com. He was speaking to us from the Chicago area. Coming up, Lobo Tiggre, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO on the TSX Venture Exchange. Rainy Mountain Royalty Corp is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Lobo Tiggre, the founder of the Independent Speculator, online at independentspeculator.com. He's speaking to us from Puerto Rico. Welcome back to This Week in Money.
Thanks, Jim. Glad to be back on the show.
Lobo, for people new to the Independent Speculator, what's it all about?
Well, the quick version is that it's my newsletter that I've started writing since leaving almost 14 years of training at Casey Research, so I'm now independent. But the idea is that it's not just about ideas or possibilities out there. It's very much about what I'm doing with my own money. So it's a newsletter. There's a free service also which describes the ideas that I'm investing in, and there's a for-pay service which tells you precisely which equities or other things I'm investing in with my own hard-earned money. That's it in a nutshell.
So you put your bucks where your mouth is.
Absolutely.
Lobo, uranium. What is the Section 232 petition filed with the U.S. Trade Commission concerning uranium?
Sure, and that is one of the areas where I put my own money into, and we'll get to that, I'm sure. First, it's not the Trade Commission, it's the Department of Commerce. There's this thing called Section 232, where the Department of Commerce can be asked to look into anything that might affect the national security interests of the United States. So this isn't particular to uranium. There was another one earlier about the auto industry this year, and it's an ongoing thing. So some of the U.S. uranium producers, though, did submit a petition under this Section 232 requesting that the Department of Commerce look into the U.S.'s really substantial dependence on imported uranium and whether that was a national security threat. Now, your listeners probably know as well as you that a large part of the U.S.'s import of uranium comes from Canada, which is sort of not on the axis of evil. Though we all question that round bacon you guys have up there, it's still not generally considered a source that we really have to worry about. So personally, I've never really been too worked up about this whole Section 232 thing. If it worked out and the United States wanted to boost U.S. producers, that would provide a tailwind for those particular things. But if not, the fundamentals for the overall uranium sector are so very, very bullish. And we have, in fact, seen uranium break out over the last year and embark on an upward trend. So, one answer to your question is that this was a way of U.S. producers trying to shore themselves up at a time of low prices that was making it hard for them. But in terms of what really matters to your listeners, I think the more important takeaway is that it's all a sideshow. You know, at most it was a potential tailwind, but even if it all comes to nothing in the end, that doesn't change the fundamentals, which are extremely bullish.
Now, the working group was given 90 days to come up with potential solutions. What could potential solutions involve?
Right. So that could go, a long way in either direction. It could be that this working group decides that the quotas and tariffs and things that the petitioners requested when they put their petition into the Department of Commerce are a good idea and recommended Trump that he put them in, which, by the way, the Secretary of the Department of Commerce did recommend that. He did say that he saw a national security issue in the U.S. importing 97% of its uranium. But Trump didn't agree. And, lo and behold, wow, I actually agree with Trump on this. I don't see it as a national security issue at all. I'm perfectly happy to trust my Canadian brothers and also our good friends down under. I'm really not worried about the uranium supply to the U.S. That having been said, it does make sense from the Trumpian perspective, this whole America First perspective, that there's an issue here. And Trump did say that he does see it as a problem, not a national security threat, but as a genuine problem that needs to be addressed. And therefore, he established this working group. So the working group, it has no constraints on what it can do. It can do whatever it wants. This is no longer part of law. It's just this thing that Trump has established. So they could come back and recommend everything that the 232 petition was requesting in the first place or more, or they could recommend nothing at all, which brings us back to my point about the fundamentals. At the end of the day, it doesn't matter what they do. It could provide a tailwind to certain stocks, and if not, it doesn't change anything. So I don't think people should get too worked up about it. But there is a real actionable opportunity here. So for anybody listening out there, here's the place to get out your pencils. The U.S. plays, particularly the ones involved in this petition, but even ones that weren't, the ones who stand the most to benefit in the U.S., they all got whacked really hard when it leaked out that Trump was not going to immediately grant the petition under Section 332. And so a lot of these stocks went on sale. Some of them dropped as much as 40% intraday last Friday. And this is, if you say ridiculous, absurd, whatever word you want, at the very least, it's way overdone for something that was a tailwind, right? A potential tailwind here, and not a make or break necessity, as I've written, that uranium needs. So I do see an extraordinary opportunity right now, courtesy of whether it's right or wrong, this disappointment that we have that Trump did not immediately grant the petition request has put some excellent companies that have very strong fundamentals, again, in the uranium space, arguing for them, on the deep discount rack right now, today, as you and I speak.
How is the spot price of uranium reacting to this committee?
That's a very interesting part of the story. There's been sort of a growing recognition, even among some of the people involved in the Section 232 petition, that maybe it wasn't the best idea. Maybe with rising uranium prices anyway, they didn't need to do it. And to the degree that the petition created uncertainty, like if you're a U.S. utility that has nuclear power plants and you think, maybe I can get my uranium cheaper in Kazakhstan or Canada, but the government might require me to buy it in the U.S. or buy a large part of the U.S., well, then you're going to wait before you buy anything until you have an answer to that, until you have clarity on that. And it does seem to be that this did, in fact, happen. And it put a real pause in the rising trend of uranium prices this year while people were waiting to see what happened to Section 232. So when the decision came out, and a lot of people are saying the decision was no, or Trump shot down 232 in flames, it's not really accurate. I mean, he did not agree to the petition. But he established this working group that still could. So what Trump really did was just punt it. He gave himself more time. But the immediate reaction was, one, to sell off these companies that I'm saying. And the candidates are obvious. I don't need to give you tickers. Anybody can go look at U.S. uranium plays, and you can see which one really took it on the chin. and you'll know which ones I'm talking about. But the uranium price itself is also, the immediate reaction was exactly like Trump had ended the whole uncertainty. And the price of uranium dropped in the first day. It jumped about 5% in the first day and then ticked up again. It's having a very good week, in fact. So the overall trend continues very strong. We're seeing a series of higher highs and higher lows, which our technical friends tell us is very important. That story remains firmly on track, I would say, for higher uranium prices, which ultimately would be good for all uranium plays, whether they're U.S. producers or not.
So what's needed for uranium to see a bull market, or are we seeing it?
I think we are in one. It depends on how you define it, of course, but generally people define a bull market as an environment of rising prices. There's no commonly accepted trigger, like we say we're in a bear market if prices drop 20%. But I don't think there is a number like that for a bull market. But in fact, prices bottomed in early 2018, and we have seen a trend of higher highs and higher lows, which has not been broken yet. Of course, it's fluctuated. It's gone up and down. There have been corrections and retreats, but that overall trend remains upward. So I would say we are in a bull market. But I think that's probably not the real question here. What people want to know isn't, are we in a bull market? What people want to know is, when are the stocks going to break out? When are we going to make a bunch of money like we did, back 14 years ago when uranium prices really started rising on their extraordinary run up to $140 a pound, and the prices of the stocks went nuts, 10 baggers, 20 baggers galore. That's what people remember. That's what people want to see again. And no, I'm not going to tell you that's going to happen this month, this year, whatever. I'm saying that I believe we are on the beginning stages of that sort of trend. And I do think that we have exactly that kind of potential ahead of us. When do we get the real breakout? When does it stop sort of staggering upwards and really start curving upwards sharply? I think that's the real question here. And I think what really should be the inflection point there is when uranium prices reach a level that the lower cost producers in Canada and the U.S. and down under start going back into production. There are a number of low-cost mines that have been mothballed, and those operators are just waiting for the right price. A lot of people are quoting 35, 40, 45 maybe, plus or minus $40 a pound uranium. If we hit that and people start turning those plants back on again, I think that will be a very clear signal. That price is still not enough to incent an adequate supply. So I think it keeps going up there, the generally accepted figure. And if you look at the feasibility studies of a lot of the companies that have projects, they really need $60+ a pound to be motivated to build those mines. So, and those aren't even necessarily the highest cost underground mines. Those are like those gravel washing operations that are relatively easy to do near surface, simple metallurgy. A lot of those guys still have $60, $65 a pound price assumptions in their feasibility studies. So that tells you where the price needs to go. That's a good double or triple from just the uranium price where we are today. And I think that has very obvious and very dramatic consequences for all the stocks, not just the U.S. ones. I just happen to think the U.S. ones that got whacked give us this wonderful buying opportunity that adds leverage to the upside because they're all on sale for the wrong reason.
We'll have more with Lobo Tiggre when This Week in Money returns.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYP.V, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, silver looks like it's in a move. What do you see ahead for silver?
Yeah, that's really quite exciting. And I have to put the caveat in here of silver has outperformed gold all 4 days so far this week. You and I are speaking on Thursday. and I understand for broadcast later, but it's Thursday afternoon as we speak, and silver just trounced gold again in terms of its percentage gains today. It's hard to get too excited about silver moving from 15.20 to 16.20. It still sounds way too cheap, and honestly, it's still too low for a lot of silver companies to make too much money. But on a percentage basis, it's a terrific gain. Silver has been outperforming gold this week, and the significance of this is, the caveat is that doesn't mean that things have to continue going again. Everybody's all excited today because some Fed officials made it sound like we might not just get the 25 basis points, but 50 basis points rate cut at the end of this month at the FOMC meeting, and that's the dollar. That's good for precious metals, and that's really given gold and silver a boost this week. But enough good news could put that off. That could take that off the table, and I think you can't ignore that possibility. So I'm not telling everybody, yay, there's nothing ahead that could possibly go wrong. Jump in and buy. That's not what I'm saying. What I am saying, though, that caveat in place, is that it's really quite significant that to see silver make a move like this. It is unusual. The first day it happened, I just kind of said, oh, that's interesting. The second day that happened, I said, oh, that's really got my attention. But 2 days aren't enough to make a real trend. The third day it happened, I wrote about it. Here we are, the fourth day. It seems to be accelerating. That's still not a huge trend, but here's the deal. Silver typically lags gold. Whenever there's been a precious metals bull, we've seen several major ones, minor ones, cycles within the larger cycles, but whenever gold takes off, silver usually lags for a while, and then it comes roaring back, catches up, and overtakes gold in terms of percentage gains. At the end of the peak, silver tends to rise more than gold, and it has every time, the last 4 or 5 peaks that we've seen. So there's a couple things about what's happening right now. One is, if silver has started that catch-up phase, it's not just going to catch up. The history tells us, and a lot of data tells us, that it will more than catch up. It will roar ahead of gold. So that gives us extra upside potential in the commodity itself, as well as the quality silver stocks. And a lot of those, silver was up 2%, 2.5%, and a lot of the quality silver stocks are up 10%, 15% in the same day. That's an intraday move. So really extraordinary leverage to the underlying price of silver. Now there's another part of this story though, and that is if this silver rise, if this silver catching up is part of the larger pattern that we've seen in the past, it's a confirmation actually of the gold move. It's telling us that this gold story has legs and is likely to continue. So that's potentially pretty important. Whichever precious metal you prefer, this move on silver is very bullish. Again, I want to insist that I'm not promising anything here. I have no crystal ball, and I really I'm made very uncomfortable by these gurus who tell you what must happen, what will happen, how this has to go here. But the odds and the data from the past tell me that things are looking very good for the precious metal and that silver has extra upside. So if you're bullish on gold, I think you need to be uber bullish on silver.
When silver stocks are in a bull market, do the majors, mid-caps, and juniors all move in sync?
They tend to all move with silver, and they're so volatile. It's the silver market is much more volatile than the gold market. So even the so-called majors, the bigger silver companies, which are small on the larger scale universe of companies, they're highly volatile. So there's a sort of a conventional wisdom in the gold space that the gold majors, when the larger universe becomes aware of gold again, which seems to be happening now. We had Ray Dalio, world famous investor, go and make a very strong statement pro gold yesterday that's been making the rounds on financial media across the internet. So when that happens, a lot of people don't know anything. They're going to look for gold companies, and they're going to find the big producers, the Newmonts, the Barricks of the world, and that those people will get the joy first. And I think we have seen that in the past. And it takes a while for the excitement to trickle down through the mid-caps to the juniors, which most people wouldn't even think about buying these penny stocks until the greed bug bites them. Not people in the resource sector. We're talking general investors out there. But I'm not sure that this translates to silver. I mean, the whole silver space is so much smaller, and all the companies are so volatile. I suspect that from Main Street's perspective, the whole silver space is the Wild West, like the juniors are in the gold space. So I'm not sure that I would bet on the majors moving first as silver breaks out. And in fact, I can tell you, having looked at the stock charts of the 20-odd silver companies that are on my radar, that they're all moving. And we have seen small, medium, and large silver stocks respond to the higher silver prices. And the advantage is actually to the smaller ones, because even though they all move in sync, as per your question, the smaller the company, the more volatile it is, and the greater the upside when things are moving upwards.
We'll have more with Lobo Tiggre right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, do you prefer silver bullion, silver coins, or silver stocks?
Well, it depends on what I want it for. I do personally like putting my savings in bullion, and I do think of gold and silver as fairly interchangeable. I can't say that I like one more than the other, but silver, of course, is a lower priced commodity. It takes a lot more silver to pack the same value as gold. So, the thought has always been that you can sock away bullion, physical savings, physical wealth for which there is no short, in gold, and then keep some silver around for making change. But that's one thing. That's bullion owned as physical wealth, of the long for which there is no short. The financial asset that is not simultaneously somebody else's obligation. You just have that. You put it away. And for that, most of the value for me is in gold. I mean, silver gets burdensome if there's too much of it. But in terms of speculation for gain, which is a completely different question than congealing wealth in physical form, I do like the stocks, and that would be true for both gold and silver. I like the silver stocks and the gold stocks for speculating on rising metals prices with leverage. And as I was just saying before the break, the silver companies tend to be even more volatile than the gold companies. In the same way, the underlying commodity tends to be more volatile. So I love silver stocks if I can find good ones.
Are there less silver stocks than gold stocks?
Yeah, that's why I said if I can find good ones. It is a smaller universe, and a lot of silver, most of the silver in the world is produced as a byproduct. And a lot of the so-called silver primary mines are really lead zinc mines. They produce a lot more lead and zinc than silver. But the silver is worth more. So you could say by value they're silver mines, but they're really lead zinc silver mines by physical volume. So it's a smaller universe. It's very hard to find something that even looks like a pure silver play. And some of the people that were in that space, like Silver Wheaton, they're no longer Silver Wheaton. They're Wheaton Precious Metals. Even very famous companies like Fresnillo, that has that super high grade Fresnillo silver mine in Mexico, they're producing more value in gold today than they are in silver. So it is hard to find a good, pure silver play. I would say there really are no pure silver plays, or very few, that come close. That said, if you've got a lot of silver in your, deposit or in your mine plan or whatever, then you get leverage to the silver price. There are both fewer of them and fewer good ones, I have to say. Since silver's polymetallic, sometimes the metallurgy is complicated. The the bulk open pit type deposits. A lot of those are in parts of the world where it's hard to do open pit mining, harder to permit, harder to get the social permitting. And the underground ones, they need to be very, very high grade for them to pay. So it is trickier. It's harder. And I guess it happens to be true, so I mentioned the 20 silver stocks on my radar. I just put a review of those for subscribers to the Independent Speculator. Just published that Monday in this month's edition. So for folks who want to know, please sign up, and we're happy to help you with some guidance there. But yeah, it is both a smaller market and one to be more careful in, because not everything that calls itself a silver company or a silver stock really is.
Is a silver bull market different from a gold bull market?
We've covered this a bit already, in that silver tends to lag and then overperform for gold. The only thing really to add to that, other than that, no, they're precious metals. They both do trade together. Sometimes there's more distance between them than others, but they do move together with a very, very high degree of correlation. And they both will break from other commodities at times of systemic stress. Like when people are worried, when the fear trade sends people into safe haven, that's good for gold and silver stops acting like the industrial metal it usually is and joins gold at that time. So largely the markets are the same. The big differences are the ones I mentioned before about silver lagging, then more than catching up. And I'll say this, one more part of that is that silver tends to peak before gold. Since it's more volatile, since it goes screaming upwards faster, it often will hit an interim or all-around peak before gold does. So it can be a leading indicator for the gold market's top, which is something to watch out for.
Is a bull market in gold and silver likely to coincide with a bull market in the Canadian dollar?
Could do. Resource economy and all that up north, the Great White North. But not necessarily. If gold and silver take off because the Fed leads a currency debasement race to the bottom, it's hard for me to believe that the Canadian dollar would be immune or exempt from that. And it's possible that Canadian politicians could embrace an extraordinary leadership position in the world and resist that race to the bottom, and the Canadian dollar could get very strong, even while gold and silver prices are rising because of everybody else doing that. But I think your listeners, the Canadian ones amongst them, are probably chuckling to hear me saying these ifs. I consider this very unlikely. It's so tempting to just go and print more money when everybody else is doing it, because you don't look any different on the Forex. And there's this whole red herring about a strong currency being bad for your economy because your exporters suffer. That's at best only half the picture. Of course, it's harder to export if your currency is strong, but it's easier to import. It lowers the cost of living for people who have Canadian dollars to spend. So I think that myopic economic outlook is just wrong. But most politicians embrace it because it gives them the excuse to print money as much as they want. So I guess I'm being too long-winded here, but the short version of the answer is that I would not expect the Canadian dollar to buck the global trend. I would not expect as much gold and silver as Canada produces for that necessarily to be a saving grace for the Canadian dollar. But ultimately, it's up to the politician, not the miners.
Silver versus gold, your thoughts on that?
I think we've covered that already pretty much. I do like them both. I don't think it has to be a one versus the other. I do think, though, that if you like gold, you gotta love silver.
How can people find out more about the Independent Speculator?
Thank you for my favorite question, Jim. Of course, you can come to independentspeculator.com. There is an About page. But I think maybe the best thing people could do right now is right at the top of our homepage, there's a link where you can download a special report that I've updated for the breakout of 2019. I have to say, I did write in January that I thought this would be the year that gold breaks out, and so far I've been proven right. So I've updated my outlook on that, and there's a free follow-up report with case studies. Of course, I will invite people to do business with me. But the reports are for free, and it gives you a taste of how I work what my thinking is like, the quality of my research. So I would encourage people to start there.
Lobo, thank you so much for being on This Week in Money.
Thank you, Jim. We'll talk soon.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Eric Hadik, and Lobo Tiggre. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese President Larry Reaugh and Cypress Development CEO Bill Willoughby. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's a good day for us here at American Manganese.
You have a new news release to tell us about. What's in it?
Well, the release came out on the 17th, and it was about the received dismantled cathode material to be tested from the U.S. Department of Energy and National Labs. So, that's good because that's proceeding. We're already ready to start testing some of the material that they're sending. And, it just puts us more into the limelight. This is actually an active program because we haven't had any announcements on it since we announced it way back a couple of months ago, or maybe it was, 2 or 3 months ago. But we do have a lot of releases, so it's hard to remember the sequence they come out in. But no, that certainly smartened up the stock, and and now we're trading at 16, which is a new high since April, and we got rid of that lid at 1 million shares offered at 15. And I think there's probably some real buyers coming into the market. There's also probably some short covering, and so it's a happy day for us here. It's a good way to end the Friday. And we've had a few things happen. One of the big things that I get excited about is we had a top movie star from out of Hollywood that's shooting a film up here visit the lab on Saturday with Zarko, our Chief Technical Officer. And Norm took him around the lab, and he was being followed by the women in there. That goes without saying. But he was really excited about what he saw, and it's nice to have that sort of interest coming into the company, aside from the usual battery companies and recycling companies that come in for due diligence, and there's a lot of that going on. Where we're really up high in calls from conference calls from some of these EV associated companies and other companies that are not necessarily associated. But it's an exciting time, and I just see it's only a matter of time till somebody steps up to the plate, recognizes the financial opportunity, and steps into the market with us on building plants, and that would be terrific. So everything's progressing. We are finishing up at the what we can do right now. We're finishing up at the pilot plant. We have one more big sample, larger than the last sample, almost twice as big. That's in for assay, and we expect to see high purity on it. If you can tell by looking at it, it looked like it was very high purity material. Trying to break 99.88 and going up to 99.9 something is a big plus. And we're in the area where people want to see the chemistry and for purity. So everything that's great. So it's I hope the shareholders are a little happier today than they were last Friday. And but we've had a lot happening and a lot of interest, and not only that, but we've been written up a few times on interviews. And last week we got a recommend. That was great. So it's great times for the company, and I think the biggest issue that everybody's going to be looking at is where's the buying coming from. Well, it's coming from everywhere, and that's great. I don't like to see the buying just coming from one source, because usually if that ends, it usually ends the buying. But this is a buying coming in from lots of sources, and so I think the word's getting around, and that's exactly what we want to see.
Larry, for people new to American Manganese, what are you all about?
Well, American Manganese is a critical metals company that developed some intellectual property and actually received patents on treatment of very low grades of manganese in the U.S., which, by the way, is the number one critical metal out there for the U.S. You can't make steel without it, and just remember that. Without manganese, you can't make steel without it. But we've adapted that technology to actually working with the cathode materials and lithium-ion batteries. And we've been successful in everything that we've done so far. And pretty soon we'll be looking at a commercial opportunity. There's a few things on the horizon that we have to address on that, because we're getting interest in that area. So, it's American Manganese is a critical metals company that owns a lot of patents, and that's great. So we're listed on the Toronto Venture Exchange under the symbol AMY, in the U.S. under the symbol AMYZF, in Frankfurt under the symbol 2AM. Our website is AmericanManganeseInc.com. You'll find everything that you need there. Anybody that wants to phone us can phone us at 778-574-4444. Or they can email me at LREAUGH@AMYMN. And just before I leave, there are some interesting articles that we've attached to the podcast this week.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on July 19th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Bill Willoughby, CEO of Cypress Development. Welcome back to the show, Bill.
Thank you, Jim. It's good to be back with you.
A busy Monday for Cypress.
Yes, Jim, we had our AGM this morning, our annual general meeting, and we also had a news release out this morning. News release was regarding developments in our process chemistry. We have a company, Lilac Solutions, out of California, that has worked with us in looking at the lithium extraction, and we had positive results there. We're working towards phase 2 process chemistry of our project, and now that is leading up to our pre-feasibility study, which we expect to have out this summer.
For people who are new to Cypress, what's your company all about?
Well, as we've said before, our company is all about our lithium project in Clayton Valley, Nevada. It's a lithium-bearing clay. It's a large resource. It sits next to Albemarle's Silver Peak operation. It's about halfway between Las Vegas and Reno. We're working towards developing a lithium resource which can become a significant producer of lithium for North America.
Where are you traded?
Well, we're traded on the TSX Venture Exchange under the symbol CYP. We're also on the OTCQB in the U.S. under CYP.V.
Where can people get more information about Cypress Development?
Well, our website is Cypress Development Corp, all one word, cypressdevelopmentcorp.com, and that's our website. They can also refer to our news releases on the website for additional information.
Bill, thank you so much for the update.
Thank you, Jim. Pleasure. Look forward to next time.
I've been speaking with Bill Willoughby, Cypress Development CEO. I'm Jim Goddard. Our conversation took place on July 15th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.